with that, I'm trying to summarize today's thoughts before I hand over, having the honor to hand over to Jean Piacconi, the co-founder of Lonnie Howell of EFG. Lonnie started the day about talking EFG and financial products and how we are grabbing this crisis as an opportunity, how we believe that transparency is ultimately important and now more important than ever, and talking about EFGI and EFG Financial Products and the support of EFGI, of the thought of investment products as being a potential way of ensuring a secure outcome, as being an analogy as well to provide transparency and security. We then quickly went into why we founded EFG Financial Products, the arguments that we stick to transparency, to liquidity, to service, to sustainability, and to security as being the core differentiation factors of our company and of EFG. We talked about people and infrastructure, how we have hired and continue to hire the best people in the industry, being 80% of the value of the company, and how we have built greenfield and infrastructure from zero, which is based on state-of-the-art technology, which again helps us to service our clients. We went into the Constructor, an example and proof of concept of our ability to deliver service and transparency. After that, Professor Jansen went into the explanation of how investment products can add value to a client by looking at the asset and liability side of a client. Any client has an asset and liability side, being it a private or an institutional client, and by managing and adding value through investment products in this process, for instance, by managing potential shortfalls on the liability side. We then went into the ETF and fund space, where we explained how we see the development of one aspect of choice, which is the wrapper, in this market. We believe that through ETFs and active funds, we can provide, in addition to structured products, security on the wrapper side. We can exclude counterparty risk to a certain extent. We can move it, for instance, to government risk. So we can manage that as well as a client, and we can give you the choice at a certain cost of yield, of course, to manage your counterparty risk. At the end of that slide was the actively managed fund, which is then in the risk term not dynamic but static. One of the big issues which we saw now during the financial crisis, that the risk is changing rapidly, and there has been coming up the demand for stable risk return products, and that can only be achieved if we dynamically manage that product. The whole development, as you see, that also strengthens our focus and our ability to risk manage, and it's just a transformation of our ability to risk manage in different formats. We started the afternoon with Michael Hartwig, who talked about our trading side. I think he gave you unique transparency, how we hedge the products, how we trade. I haven't ever seen a presentation which so transparently describes what we do, how we do it. He went into the market making tool, the Apollo, how we quote prices on the exchange, into the barrier monitoring tool, how we monitor our barriers and then service our products on top of that. And he also went into the explanation what happens behind the Constructor and how we manage that risk. We had just before Emmanuel Derman, who went into models, starting with the airplane, going into phenomenological models, statistical models, and probably one of the messages which I took along is the abstract level of a model has a value, and what you have to be aware of is what it doesn't catch. But it's probably a better approach to have a higher abstraction level than to go too much into detail and lose yourself. EFG Financial Products is further developing its platform. We have just started in December 2007 officially. We have developed relatively quickly in that market environment, successfully as well. We are increasing the platform and the footprint on a global landscape by growing the underliers which we can offer to you, and also in the regions where we are active. From my side with that, I thank you very much for the partnership, for the trust, and I'm looking forward working with you in 2009. Thank you very much.